All right, hello and welcome everyone to another edition of Market Trading. I am your host, Vays, and today we are joined by a very special guest. I'm sure you all follow him on Twitter. So let's say hello to Phil. How are you, man?
Hi, Tone. I'm good. Hope you're well.
Excellent. All right. I think last time you were on the show was around May. And go ahead and do a brief intro. I should have been a little more prepared, but I'm going to open up your Twitter right now so people can go ahead and follow you along with and do a quick intro because we got a lot of charts to cover.
Sorry, did you say do an intro? Sorry.
Oh, yes.
Oh, yeah. So just a little bit of background. Been involved in crypto since late 2015, early 2016. So I'm going into my my third cycle now of being a market participant. As you can see there, I'm having a good time at Decent Trader. You know, ultimately, it's a platform that we provide various different pieces of information about different crypto assets and different algorithms as well, which assist with trading, which is ultimately what we're doing, you know, is trading the market. So hopefully we'll be able to give you some insight in what we're doing. So yeah, still here after all this time. Looking forward to talking about potentially what's going to happen in the next cycle.
Awesome. And tell us about Decent Trader real quick. I'm sure you're going to be pulling up charts off of it, but
yeah, so basically it's a market intelligence platform and tools. Like, you know, my background's in finance, I won't bore you with that, but when we came into this market, you know, we found that there was a bit of a gap where there wasn't really a hub where you could get all of the different pieces of information that you'd need about crypto, Bitcoin, and so on and so forth. I mean, my business partner is also Philip Swift of Look Into Bitcoin. So, you know, pretty strong team with a lot of experience there. So yeah, that's what we're doing at the moment is providing that as a service. It's just to keep us really interested and busy. You know, it's good to do something else while you're actually doing the trading and stuff, something creative. So keeps us busy.
Oh man, I saw the word Moonraker. What is that?
It's a bit of a play on so I've got various different indicators and strategies, which I will go through some of them now. We'll actually look at that particular tool. And it's a play on mean reversion, Moonraker, moon.
Right. This is from the James Bond movie, I'm assuming.
Yeah. So it's just a play on words, really. But it's really a mean reversion strategy.
Right. So I'm actually asking, I'm putting up a poll for the audience real quick. Start a poll. I'm going to write the question. In Moonraker, did Dolly, the blonde at the end, have braces? Yes? No? Never watched it.
That's a pretty niche poll.
So question for you, did Dolly have braces?
Do I think Dolly had braces? If it's the person, I think, is it it's the blonde girl, yeah?
The little blonde girl that helped lift that big wheel off of Jaws, who then smiled, and then she smiled at him, and then he smiled back, and then they ran off holding hands. Did she have braces?
I'm going to work on the basis that the reason for the question is that she doesn't. I guess it's a trick question because she did throughout the film, and she's probably some sort of error in the film, is my guess. I don't know. Is the answer. I'm going to guess no.
So, well, the poll's still going. I don't want to mess with the results, but we'll discuss this question later in the show. Okay. So, without any further ado, let's get into the charts. Let's start with the deep overview. I'm doing my screen share. You know what? I'm going to do my screen share super quick, and then we're going to go through your charts, but I would love for you to comment on my charts real quick. In the beginning of the year, I put out two potential paths for Bitcoin. Obviously, they were both bullish because we are entering a bull market, but I had a more bullish version that would top out at a lower price and a more consolidated version into the halving that would make up for the losses on the back end. So my projection is pretty much, or maybe we should have saved this for the end, but you can save it for the end. I think we're going to hit the halving at approximately the current price, maybe 30K, 35K, and then still struggle. And then the bull market will finally start like a year from now or something like that. And that's when we take off and finally break the 100K. What are your thoughts on the long-term picture? And I'm trying to find the best way to do this. Should I just go through my charts real quick and then go to your charts? Or do we want to go chart by chart? How do you want to do it?
Specifically, I've got my own version of this chart, which it looks kind of very similar. And a lot of the things I was going to go through are based on timing and how do we get to a certain price by a certain point in time. And what you'll find out is it's broadly looks similar.
Excellent. Hold that thought then. I also happen to have a chart. I had a traditional trader, Chris Chiabacco, on, and he also has a projection for the stock market to go into a secular bull market. So I'm bullish for pretty much the rest of this decade, and so is he. This is a chart of the Dow Jones going back to the 1800s, and we completed a 15-year stagnation between 2000 and 2015, and now it's time for a 20-year bull run, and we're only halfway through it. So I don't know what your long-term thoughts are of the stock market, but I would love to discuss that with you later on. This is my weekly chart of Bitcoin. I did have an MRI buy indication last week. I've been basically warning everyone that this could be a decent reversal, but I'm not sold on this current reversal breaking the swing high. There is multiple reasons for that. The biggest one being I hate double bottoms. This is as perfect of a double bottom as I've ever seen, and I don't trust it. I like seeing either higher lows or lower lows, but not equal lows. This equal low is bothering me. I think this is a 1 to 4 week dead cat bounce into the $28,000 moving average resistance, which is happening on a weekly scale and the daily scale as well. There is an MRI sell coming up on the daily tomorrow. We are in this rejection moving average cluster, and I am still leaning, slightly leaning towards a rejection, establishing a lower low in the $23,000 range, and then pissing more people off, and then consolidating at 28, and then consolidating at 32, and then eventually, you know, breaking out towards the halving, then pulling back after the halving. You know the rest of that speech. You know what? I'm going to stop here with Bitcoin, and I'm going to hand it off to your charts. We're going to talk about Bitcoin. Then I'll probably take screen share back as we talk about other markets. So let's do it. Let's get you on. Let's get your screen sharing here.
I think you've disabled it.
Yep. Oh, sorry. I have to enable it. There you go.
Right, we're good.
Great. Oh, I have the exact same chart. Shit. I'll show you mine after.
Yeah, I mean, what I will say is, don't want to spoil too much, but we're going to come to quite similar outcomes, just in a slightly different way, which is quite good. Quite good in some ways, but I'm always a bit worried when we're agreeing because that might mean someone else happens. But anyway, let's go through it. So I'm going to start with basically just sort of a bit of a health check on, you know, the logic of, are we in a bike cycle? Is the cycle still a thing or not? And I think, you know, it's broadly reasonable to say that, and what I've been saying actually for basically banging the drum all the way through the bear market, or the big drawdown. That's this one, isn't it? Saying that, you know, the 1,000-day mark was going to be really quite important in previous cycles. You know, just shortly after or around that time, Bitcoin started to move up off the lows, and we actually got that slightly ahead of schedule this time around. And the bounce hasn't been as strong as the previous cycles, but fundamentally we have moved off the bottom around the same sort of time. You know, and I do think that the Bitcoin cycle is important for various different reasons. Obviously, we know that, you know, the Bitcoin emission rate is halved and so on. But also the market participants and the way that this market works, it yields that kind of response. And ultimately, not necessarily because it's happened before, it's going to happen again. But, you know, from what we can see, I think there's enough evidence as we go through it that similar things are happening. So what I would really want people to notice here is that around the sort of day 1275, in the previous two cycles, you see that that we start to move to the upside. So just bear in mind that's the start of November, so sort of deep into quarter or halfway through quarter four of this year, is when you would start to see that. Now, obviously, following that, we move towards the actual halving, and then we actually do the halving itself, and then we normally dump actually just marginally after that. But just bear in mind that because I've got some theories as to why that might happen as we go. Just moving on just slightly, and Tone, stop me if you've got any questions or if you want to interject.
Well done.
What we have here is the yellow line is the 1 year hodl wave chart. So it's basically people who've been holding on to the coins for 1 year or more, what percentage of those coins there is. And typically, if you remember, we're sort of in this sort of phase at the moment in the cycle, waiting to potentially have this kick off to the upside. And in here, you can see obviously the holders greater than 1 year kind of flattens out. And then as things break to the upside, people start unwinding their coins, and very much so towards, you know, when we see that final push to the upside, you know, people who've been hanging on for however long fulfill their dreams and they sell all the coins to the newbies. And basically that is what happened last cycle again. So the market participants behaved in the same way. And once again, we can see that people are basically holding on and slowly accumulating the coins. What is interesting is it started to happen below, sort of, if you know where it happened, it was here. So if you bear in mind, that's 12 months of holding. This kind of looks back 12 months the whole time. So there's a lot of people here who will actually be underwater, to be honest. And that's generally why we have resistance, right? Because there's supply and people are going to want to get out, and then that's why we can't just go and put in a new all-time high straight away, etc. But ultimately, you know, you can see market participants, you know, in terms of the supply, generally are doing the same as what we've seen previously.
Wait, before you switch, no, go back. Question. The red and green dots, is that an automated feature, or is that you manually put it in? Because I don't see it in 2021 at all.
I didn't actually build this chart. My partner, who's Phil Swift, is looking at Bitcoin Positive Crypto on Twitter. He created this chart. I'm assuming he put in where he thought the top and the bottoms were. I presume that's what that is. So the red dot at the top is where it prints the lows. So the lows and the highs.
So they're not automatically generated in any, even like in a backwards fashion, because I'm just curious, because they don't exist in 2021.
No, all it's doing is it's showing the highs and the lows. So you pivot high, pivot low of the cycle. Okay, we didn't put one in here actually. You have spotted that we've missed that. We need to add it. Good point.
Okay.
So yeah, anything else on that? Or is that good?
No.
Okay, so people can get these on the site if you just want to go and have a look later. Anyways, so MRV Z score, MVRV Z score. This is the one I think Murad came up with back in the day, was it? Oh no. Yeah, it was Murad and David Puel of Adaptive Capital back in the day. So what this does is it really shows that the amount of
I actually just had dinner with David a few weeks ago. I'm not going to say where. I don't like to dox people, but it was good to hang out with him. He wrote a huge, like 100-page report for ARK Invest on Bitcoin's on-chain analysis. It was really good. I can send it to you. Yeah,
he's super intelligent. You know, those are the days back in the day when a lot of these models that are sort of you'll see on sites like Decent Trader or I forget the other ones off the top of my head, but a lot of all of those charts were sort of built in the depths of the sort of 2018 bear market. You know, when we all used to be in a group together, and there was a real sort of nice like university in a classroom, all trying to get together and come up with some new models and ways to look at Bitcoin sort of thing. So I sort of miss those days. Really, they're quite good. But anyway, super clever guys. But yeah, so what this chart is so it basically looks at the extent to which people who have coins are in profit or not, as the case may be. And you can see obviously when this blue line gets up to the top, where it generally shows there's too many people in profit and it's time for the top to be in. And we've seen that in previous cycles. I mean, it is starting to come down. You know, people don't get into such a big profit position as they have done previously, but the lows tend to be pretty good. So you can see we basically bottomed out the same way that we have done previously. And versus the previous cycle, you know, lo and behold, we're sort of over here at about this sort of level. So there's about the same number of people overall in profit over the time. And then we've basically, if you go back to the previous cycle, the value is almost identical. So exactly the same. It was about 47, 48. It's currently at 48. And then the cycle before that, when we're consolidating, it's pretty much the same sort of range, maybe slightly higher, but ultimately, again, the market's set up so the market participants are behaving in the same way. They're in the same sort of amount of profit that they have been previously. And the timing of what we've seen so far. So each of those three things has been the same. So in terms of the miners as well, so moving on to another one of David's calculations that he's come up with in the past. So what this one does is it looks at the extent to which that miners are in profit, or not in profit, but how much money are they making relative to what their average is over the last 365 days. And the idea being, you know, when that gets really high, the miners are like, you know, or like any business might be, you know, let's realize some of this money and they'll dump the coins. I do think this will change over time a little bit, you know, perhaps due to hedging. So it won't be as necessarily, well, actually, that's not true. Ignore what I just said there. But ultimately, anyways, the miners will ultimately behave in a particular way. If you're deep in profit, you're probably going to sell off your reserves, right? It's like similar to a coal trading business or a gold or any kind of other miner who would operate. They want to make that, crystallize those gains when their profits are super normal versus their normal operating expenses. And you see in the previous cycle, we were in here at the time, and then when it gets this big cut off here, it's when the halving actually happens. So that is the halving there. And this is going to be important in a minute, but you see we're around this sort of level back in 2016. Yep. Back in 2020,
right after the crash.
Yeah.
After the COVID crash. Yep, right there.
Well, I guess COVID kind of screwed it up a bit. Like in terms of where we are now, in terms of exactly where we are now in terms of the cycle, we're around about here. So it's around the same sort of values. I think, you know, so they obviously dumped because they're all shit scared of COVID, like everyone else.
Well, right. So this was the question that I have for you, right? I think that the COVID crash was a bit of a fluke. And I'm not expecting something like that again. Something like that did not happen in the two prior cycles than the 2021. And I think COVID was a bit of a black swan. And that is why I think people that are waiting for sub 20,000 Bitcoin prices, I think there's a high probability of them being disappointed.
I agree with that. You know, I think when we go through the macro stuff, probably get into that in more detail, but you know, holding out for doomsday scenarios as your MO has never been a profitable strategy in the history of the stock market, apart from on a very few occasions. You know, you're always going to lose. The risk reward doesn't make sense. So, you know, I think it, you know, I personally, when we went through that pre-COVID dump, I was of the opinion we were going to continue, you know, consolidate like we ultimately did afterwards and then move higher. You know, the fact that we dumped was that is a black swan. You know, I've never seen the market limiting down. Every time Trump speaks, you know, the market's dumping 5%, having to stop it. You know, is like they were really unusual scenarios. And I think there is a potential that we end up in a black swan situation, particularly if the Russia-Ukraine situation doesn't, if that escalated, yes, of course, like in the,
I'm more concerned of like Binance and Coinbase like being taken down at the same time, for example.
Yeah, I mean, that would be catastrophic. I mean, we've never dealt with that before. We've seen, okay, we did see FTX go under, but I just think that would be one step too far. Like too much volume takes place on Binance. And Coinbase is the sort of, the mum and dad's approach to getting into crypto almost. So I think it would just be devastating for retail. And it would also be really difficult for people to get into the market. So I just don't know whether, like, a lot of people would just give up, I think, at that point, which might be, and some people would argue that's what needs to happen. And I have seen that case. But it seems as though the SEC is actually having more difficulties in actually pursuing Binance. I think there was something that went across my desk briefly yesterday or the day before. So I don't know. But it's sort of like betting on the worst case scenario. It's just a bit of a risky strategy, when we go through this. It's like, you can be nimble enough to get out of the situation if you really wanted to. If you in the business of gambling to that extent, then you need to be nimble as well. And it's all very well saying, oh well, I'm waiting for a big black swan event, but the reality is that people just don't have the balls to go in when that happens. When COVID dump happened, the exchanges were all broken. The world was effectively blowing up. Nobody was going to be going to work anymore. Your mum, you're getting told everyone's going to die. So the last thing most people are thinking about, unless you're really skilled, is opening up your bank account and piling all of your money into Bitcoin. Fair enough, some people will, but I tell you, it's tricky to do. Fortunately for me, I was trading at the time. That's what I was doing. So I was loving the whole experience. Really, it was all quite the volatility was crazy, and it did turn out to be very profitable. But I tell you what, the ride back up's not very easy either after you've had such a big dump. So yes, I do think the black swan could happen at any point, and we have got an environment where that might happen, both from a macro point of view and also internally. There's always that risk, but as I say, betting on it, it's just not for me. I think you have to take everything into account and form a view, like as a whole picture, as opposed to one narrative, because you can get blinded by it. But anyways, the miners are in about as much profit, roughly, relatively to the last 12 months as they have been. So they're probably in quite good shape, is where I was going with that. So from a cycle point of view, that all looks quite good to me. Like everything's kind of teeing up, narrative slightly different last time. We've been talking about ETFs since, in here back in the day. ETFs very much on the menu again. I think that this time it's different. the famous last words, but I do feel it is a bit different last time, with BlackRock and the gang, big asset managers piling in. There is a bit of a build it and they will come. And I don't believe all of these applications have gone in when they've got a 99.9% record of getting these things over the line. They won't have done all this work and built whatever it is that they've probably looked at building in the background. I don't think they'll have done that without the relevant due diligence. So I think it's relatively safe to assume that at some point an ETF will come along. I guess the argument might be, well, Binance needs to take a fall before that happens. And I guess BlackRock and co probably have a good way of, twisting a few arms along the way. So I don't know. I think that is very positive anyway, from where we are. So just before we get into things, I do want to talk a little bit about the cost of production. I think it's an important thing to consider here. So obviously we just talked about the miners, how relatively profitable they are. And then we also looked at this sort of behavior that happens over here in advance of the halving. Now, obviously, I don't want to lecture people on teaching people how to suck eggs, but obviously you know, the order book's very much, it's the front end of the supply and demand that really is important. And obviously the main supply, natural supply that comes to the market is coming from the miners. We know that a large amount of the supply is being held by people who are holding with a long-term view of greater than 1 year. So that's not going to change anytime soon. You know, these guys aren't going to be piling all of their Bitcoins, getting shot of them anytime soon. You know, that these guys are, this supply is effectively fixed in my mind. And then you have demand, you know, and what does demand look like in crypto? It normally comes through speculation of halving, and then a grind along a bit, and then we break the all-time high, and then in comes the retail masses. So effectively, we're sense checking here. Are we going? Is the market going in the same direction as previously? Why do some of those things happen, and can we see if we think any of those things can happen again? Oh, this is an interesting old chart to pick up on. Like I used to be of the opinion, I still am to some extent, that the marginal cost of production is where price will gravitate to, and it won't really go too much below there because of the game theory of, you know, miners not wanting to sell below production cost, at least marginal production cost. And, you know, I used to work in the mining industry, and I just did an 80-20 approach. I can never be bothered to do models in too much depth, because after you've done a lot of them, you know that actually 80-20s save you a hell of a lot of time. It's normally about the same outcome. And yeah, the idea here back in the day was that we would gravitate to the marginal cost of production. I've done the maths somewhere in here. Maybe I didn't share the maths actually, but ultimately, you know, that is what happened, you know, called the exact bottom almost. And what also happened was that you can see that we know that last cycle there was this big uptick, but price then gravitated back to around about double what the bottom price was. Now, again, back in 2015, we put in a bottom around 200. And then price effectively went up to about 400. I've not done the numbers back in those days, but I just find it interesting that price found a bottom. Let's say it might have been the cost of production, and then it doubled, you know, from there, and then it sat at that level until it broke it, you know, like we saw before, just before the halving. And here, like similarly, came back to double the bottom price, and then moved up after the halving. I did a fag packet calculation a few weeks ago. I'm looking at it on another screen because I don't want to dox myself, but I took 80% of the production, which is now not all in China, and I found that from last year. And then I got the cost of production, allocated the cost of production for each, predicted cost of production for each of those regions. And it came out at 15,300. Are you still there, Tony?
Hey, Phil?
Yeah. Hello.
Phil?
Hey.
Hey, Phil, you with me?
Hello. Yeah. Yeah. I am.
Yeah. I lost connection for a second, but we should be good.
Okay. Where are we now? Are we back up?
Yeah, I think we're back up, but you may want to repeat the last 4 sentences that you said.
Okay, so where I was getting to is I did the calculation again for what the cost of production might be. Oh no, I won't do that. But ultimately, it came out with the weighted average cost of a Bitcoin of being about 15,300. Now, in my simple mind, I think that there is an element of game theory that goes on where ultimately the price needs to be double whatever that marginal cost of production is, if that is truly what the bottom is, and why it stops where it stops. You know, there's a lot of different reasons why technically it did stop where it stopped. This is just one sort of additional input.
Yeah, but Phil, after the halving, doesn't that border go up to us?
Yeah, exactly. So I think that there's a requirement for price ultimately to get to about 2 times what it is off the bottom, right? So if we're okay with price being at 15K, you know, we need it to get to 30K by the time of the halving, right? In round numbers. You know, we saw the same here. You know, we're at 3K. we ended up prior to the halving about 6K, and then give or take, and then we had the move higher. Here, you know, we got to about 200, and then prior to the halving, we consolidated around sort of double that. You know, and what are we doing here? We're 15K. We've visited 30, and we're sort of consolidating around it. So, I think there's an element of whether or not it's intentional or not. You know, it's a bit conspiracy tinfoil hat stuff going on. But I will show you here. This orange line is the Bitcoin miners. And what happens when these big pump happens in the past is that the miners stop selling and they start holding their coins. It happened here as well. In both of the previous cycles, that's what happened. So on the sharp end of the book, you have supply stops going to the market. And I mean, collectively, they're incentivized to make sure that that Bitcoin value is double at least what it was last time. So while you have that happening, you know, it's November, this time period that I'm talking about, it's the first week of November. That'll be a good sort of 90, 100 days or so before the halving, probably more likely 100, maybe a bit more actually. But anyway, around, I think the halving is due to be sort of first week in March or something. So you'll get this convergence of speculative demand that's going to come in ahead of the halving, which is, you know, the smart money, if you like. I mean, the really smart money is obviously at 15K, but whatever. So there's still that speculative interest coming in. And then it seems as though the miners do, whether it's intentionally or not, work together to get the price up, from what I can see. And, you know, and then that's why it probably dumps after the halving and creates the new bottom around about where the consolidation.
Right, but this time, but it looks like this time around, there isn't much miner reserves left to sell here. I mean, the chart of miner reserves keeps going down and down and down.
That is true, yeah. I mean, that over time, that is what's going to happen, right? I mean, the miners need to pay for the electricity and so on that they're using. I think that's naturally what's going to happen. There should be a shift from, you know, the miners to everyone else, because it's like gold, isn't it?
That line is making me very optimistic that we may not have a sell-off after the halving. In all the previous times, and I just spot patterns really quickly. With this chart should be rising. The orange line should be rising since the $15,000 low, but it has not. It's continued to decline. So the miners may not have any Bitcoin left to sell as the halving comes around.
Well, they'll still have this is just flat. Like, this will just be flat. Let's say this just stops here. Like, the miners are still going to be generating new Bitcoins, aren't they? So they might still get a bit. They may still restrict supply to market in order to help.
Maybe, but it's not. But that's theoretical, right? Like, we know that so far they have not.
Yeah, absolutely. And in all the previous.
But in all the previous, they've already started accumulating by this time.
There was some accumulation. Yeah, you're all right there.
Thing to split up, like on that first chart that you showed, where the price in 4-year cycles, it will be interesting to miner reserves alongside each one of these cycles. Yeah,
I mean, that is something I can do. Not now, but I can do that. So yeah, I mean, it's an interesting chart. Just to see how the new supply to market. I think, you know, I'll be really bullish if we start to see a move up in price and this starts to go higher. I mean, we have seen some small accumulation occur through this.
Really? Because I would be more bullish the other way. I would be more bullish if that line does not rise as the halving nears and as the price rises, because the more the orange line rises, the more likely those Bitcoins will hit the market and drop the price.
I agree, yeah. But I think that would happen across north of 30K. So I don't so I think we'll end up higher than 30 and then dump down to about 30 is my logic with that. I mean, this is all theoretical. It's kind of like game theory. It's very difficult to prove that that's what's going on or not. But from a game theory point of view, it makes sense to get that price up to about double your marginal cost. So So we'll have to pay attention to this. I think it'll be interesting to see. I mean, it's tricky, you know, you could throw a moving average over this stuff, but it's,
Yeah,
you know,
so that data is available in TradingView. I'm gonna look that up. BTC
yeah.
underscore minor reserves, or is this custom by you?
No, it's on TradingView. So if you look under
Wow.
crypto,
Oh no,
into the
I'll find.
block, you see into the
I'm
block
finding that
here.
very, very interesting.
So actually, a lot of stuff on here is interesting. I haven't been through a lot of this, but they've got the number of whales. How the hell you'd know? Oh, well, I know that. You know how you'd know that. Number of retail users. I don't know. There's loads of stuff on here. I shouldn't be telling you where I get my my info, but yeah, there you go. So yeah, I mean, people could probably download it and do some correlation analysis and all that sort of stuff and plot it yourself. I don't know. Anyway, so that's broadly the basis for some of my thoughts. You know, I'm very much, I like to do short-term trading, more so algorithmic based, but really getting the big moves right and positioning right for the bigger picture is really what I focus on, because there's a time when I'm not looking for short positions, you know, because the market's going off hot, and you know, you need to know where you are in your ideas. Obviously that can change quite quickly, but depending on macro and stuff, but overall, you know, I think that from my point of view, things look pretty similar to as before. The 2x off the halving, off the bottom, going into halving seems like normal behavior, and it's actually more similar to what we saw over here in 2015, where you did get this period of consolidation, and actually, you know, really, you know, this has been often looked at as like sort of textbook Wyckoff bottom, where you consolidate above, you know, and you come back. I mean, it literally does look exactly like the textbook, and then you break out and you have your markup. And, you know, again, you know, it's fair to say that this is a retest. I know what you're saying. This is a double bottom here, and you don't like those. And, you know, we'll have a look at potential for why we might break down below there in a minute. But broadly speaking, it kind of looks okay. I will get onto my other chart shortly here. So this chart is very similar to the one you had, you know, and it's not difficult to come up with the next cycle. Oh, it's probably going to be up and to the right. I have done a little bit more, you know, this rainbow chart. I think that's actually how I met you, is when I first did. I think the first time I ever spoke to you was way back in the day when, where is it? No, we're going to find it quickly.
Yeah, it's all good.
I don't know, somewhere around this sort of time. Anyway, so these lines, obviously they get drawn arbitrarily. I've tried to do it in a bit more mathematical way. So I've done like regression analysis of just taking the peaks of the previous cycles basically, and the lows, and then if you plot those, you get basically an R2 of like 99.9. You know, it's very highly correlated with this logarithmic trend. And the useful thing with that is that, you know, if you use, I think I might have been through this with you before, but if you look at the dates when you get an early cycle and late cycle peak, basically I can plot on this chart moving forwards number of days and then what would the peak be. So I know like based on the maths, what, you know, based on a date, what's the price going to be at the top, sort of thing. And that kind of says, you know, if there is a theory out there that you're getting diminishing returns, and to some extent you are, but actually logarithmically, the regression sort of suggests that the trajectory isn't what people are doing. You know, they're sort of going, oh, it went from 20 to 60, that's a 3x. Next time it's going to have to be lower. Not necessarily, looking at the maths. And then so that gives us basically, depending on when you get the peak, which would be potentially in you know, back end of 2025 basically, or partway through April. You know, you're looking at highs of somewhere between 218 and 247,000. That sounds crazy.
I think if you go, can you go back to that?
Yeah.
You sure your dates are right? Your early cycle peak has a later date than the late cycle peak. What am I missing there?
So this is, oh, it's because you're American.
Oh,
we do our dates
that's why.
the other way
Okay,
around.
got it, got it, got it.
Yeah. So yeah, I would expect to get that bit right. But anyway, so yeah, so depending upon where the peak comes in the cycle, the sort of the theory, if the cycle goes on a bit longer, you make a bit more money. But if the cycle comes earlier, you know, you're probably looking at more of like a blow off top sort of situation. So obviously that comes out, it's somewhere over 218 to 250. So it seems crazy. But that's what the math says. And, you know, again, it's just a trend. You know, I know that it's going to change moving forwards largely, but I think, you know, it's not beyond the realms of possibility, in my opinion, that if we do get an ETF, I know you probably, I think from years ago, I remember you very much didn't want there to be an ETF, if I can remember correctly. But if we do, you know, I don't really care if it goes 200K, right? So I don't know if you've changed on that view. I don't know if you're as hardcore Bitcoiner as you used to be. But anyway.
I can make the argument in both directions. I will admit that if the ETF comes, it is very likely to bring the price significantly higher. However, if the ETF happens to come at the top of the cycle, just random time, then it may not bring the market higher, right? So there is a perfect sweet spot where the ETF comes at the very, very peak, just like when the futures showed up at the peak, and there's just nobody left to buy. That's possible. However, if the ETF comes, say, in the next 6 months, I think it's going to drive price significantly higher. Now, that's good for Bitcoin hodlers, including myself, but I think that's bad. I think it's still bad for Bitcoin itself.
I totally agree with that. You know, like, really, we want to be the custodians of our own Bitcoin. You know, that's ultimately part of the whole deal, isn't it? The whole arrangement is that there seems to be this whole new, it's pristine collateral sort of narrative, which is true. But if your Bitcoin's in an ETF and you really need it for some reason, you know, it's going to be tricky to get at it if you can't, if there's a you can't. So yeah, I think from a Bitcoin point of view, it's not great. But from a personal, purely I want to make some more money point of view, then
yeah, for selfish reasons to buy a Lambo, you definitely want an ETF.
yeah. So unfortunately, I'm human. So I am subject to greed. Although, you know, I personally will be holding my own Bitcoin, unless there's some efficiencies not to. But yeah, I'll never sell all my Bitcoin. So yeah, I mean, obviously we know what happened when the gold ETF happened, right? I mean, I do have big sort of concerns around regulation. I know we talked prior to this, and you know, around regulations just generally, because there's all sorts of regulations coming, particularly in the UK, which is going to definitely impact the ability, specifically for shitcoins, to do well next cycle. I think they're going to have a bit of a tricky time of it. But Bitcoin maybe not too bad. So like there is part of me that thinks like an ETF would allow for that money to come in. And, you know, again, if you remember back to these cycles, the reason that we get the pump, the narrative, just people have a lot of different reasons as to why something's going to happen, and then it just happens anyway, and it's for a completely different reason. And so maybe it won't be the ETF, maybe something entirely different will happen. But at the minute, that's the narrative. So, and I can see why it would work, you know, and it works in time with the halving, and there's all the other infrastructure potentially being built and legwork being done. So anyways, that's broadly what I think is going to happen. You know, in terms of like actually how would we get there, you know, does it make any sense? I mean, as I say, like this is a Wyckoff bottom here. And what we're doing, well, it looks like a Wyckoff bottom. What we're doing is we're retesting. You know, what tends to happen is you get this reaccumulation period here, and then you get markup again, and then the process kind of repeats until you get the ultimate takeoff. And if you just look at it, I just think it's beautiful in the way that you can kind of see how it'll play out, right? I mean, this is all like a quasi head and shoulders bottom here. That's then turned into a head and shoulders retest of the breakout, again, sort of textbook. at the same time, I mean, Wyckoff is kind of like these head and shoulders and cup and handles and all this. It is Wyckoff theory, but you can see that this would then turn into effectively a gigantic cup and handle here. And then that would give us a target up at previous resistance up here, which is almost perfect, you know. So it's kind of setting up. And then obviously when you get to here, what will probably happen? We'll probably have a big sell-off and then some sort of consolidation. And then you're just going to have this big triangle effectively and a huge cup and handle. Again, it's like a cup and handle inception kind of thing going on, is what I'm sort of seeing happen here. And I think that's the road to how we get there, is just this giant cup and handle that will look potentially like that. And then we're going to get another target from that, which takes us to 82K, you know, and the 1.618 is the previous highs. So that's broadly how I see this thing setting up, you know, in terms of supply and demand. The cycle kind of makes sense. The market's kind of behaving the way that you'd expect it to. There's just a bit of a question in the meantime. You know, do we perhaps come a little bit lower and make everyone really concerned? And obviously there is also the potential that there could be a big black swan from somewhere. But
hey,
let's
wait,
just
before
assume.
you move on, go back. So on the bottom right corner, you have a bunch of indicators.
Yeah.
I know them all except Awesome O. What is Awesome O? Or and
Okay, so
why is it bullish?
So what Awesome Oscillator does is it plots the difference between two moving averages. So say you had two moving averages on the chart, what it does is it will plot literally the difference. It looks something like this. Yeah. So where this difference is, so where 0 is that they are crossed. It's actually a bit like MACD, you know, the histogram on MACD. So when this goes above 0, when the cross bullish, like this will start rising. So you'll start getting green prints on here. And then when the moving averages start converging together, it starts declining. And then when they cross below 0, when they go cross negative or bearish rather, the histogram starts printing the other way. So it allows you to basically see the rate of change at which the moving averages are converging together. That's why I say I'm almost saying moving average convergence divergence, which is MACD. I mean, if you really want to know the maths, you take the open, high, low, close position, divide by 2, rather than taking the exact moving average differences. Sorry, I'm a bit of a geek with this sort of thing. So
This is great. I'm actually super curious how you were able to show the bullishness and bearishness of your oscillators without actually displaying them. I'm gonna have to talk to you about that offline.
Yeah, I've been working on various algorithms and heat maps and stuff like that. They're not public. They're just for personal use at the moment, but that might change. So I'm very much into doing strategies now. I'm sick of trading to some extent. I just want to focus on getting things automated. And, you know, if you can build a strategy.
Me too. I want to take some time off and put together some automated strategies, especially like trying to code up the MRI. This is going to be one of the main things one of the main sessions during the financial summit in Dubai, which I am trying to talk Phil into joining. One of our sessions is going to be a discussion on automated trading. There's a couple of guys that are coming that, well, it's hard to be an expert at this, but more of an expert than I am. Let's put it that way.
Yeah, I mean, I don't really want to say too much, but I've bridged the gap where it makes it easier for other people to do it. But I'll talk. That'll come later on. Just pay attention in a couple of months' time, and you'll find out.
Oh, I will. Yeah, we're gonna.
I'll show you what I've done as well, and you can share and you can reapply it for yourself, but you can't share it anyway. Where were we? We were here, weren't we? Yeah. So that's something else. So yeah, that's what Awesome Oscillator is. This is actually my version of it, which is calculated differently, but it's working on the same basis. But the good thing is, and I will just point out right now, so I'll hide some of this stuff here. So what's interesting, Tony, is look at this. Actually, I've got a heat map as well, which can show you
Right.
that
That
all.
I want I would love to get a piece of that code so I can do that with my indicators. Like whatever I choose to use there, so I can have like that thing in the bottom right hand corner, telling me what my indicators are saying. That's amazing, man. Love it.
Thanks. So yeah, I do this. I really do look at the charts. You know, this just saves me so much time. But anyway, so you know, other thing. So looking at awesome oscillator specifically there, you know, you can see momentum is starting to shift. So that's showing, you know, the moving averages are starting to get a little bit more bullish again, which is good to see because for a long time you could see it was putting in these bearish divergences here. So this was looking a bit ropey up here, and this was always going to be tricky to get through. I mean, I will show you. I do have various other indicators. So all those lines that I'm just deleting now are the liquidity tool. Remind me to come back to that in a minute. But this is the situation for Bitcoin. That's not Bitcoin. That's the Nasdaq. This is Bitcoin. So Bitcoin's got all of this resistance it needed to get through here, right? Like back to 30.5K or 30.6K. And the longer that it's been resistance, the harder it is going to be to break it, you know, in my simple mind. And really, I mean, I've stopped this. I'll go running further back, but it also goes back to here where it was support as well. So it's a huge level to get through. And it's a little bit naive maybe to think that we would go through that straight away. There was some arguments as to why it could happen, but you know, it was always going to be tricky to get through there. And you can see not only do we have the previous resistance, you know, it's now plotting in future resistance as well. Again, this is like another algo that I basically use. Get it on the site if you want it. But anyway, so we're currently sat on this support level again, right above the 50-week moving average. We've got here the 200-week moving average, which is the sort of teal color line. The 20-week is the blue, and then this red 100-week moving average. So the 100 weeks like really stuck in amongst the resistance up here. 100-week really important, 2-year moving average, pretty much. You know, when you break that, you know, it's a good sign of things to come. You know, pretty much absolutely bulldoze through it when we do ultimately get there. Can't see it on here, but it was the same in the previous cycle as well. Blue line 20-week moving average. You know, if I go back to what I was saying, it feels a lot like the old days back in this horrible consolidation over here. We broke down across the 20-week moving average, and the same thing happened here. You know, we broke down across the 20-week moving average, but we're above that 50-week moving average again. Back in the day, 50-week moving average, that's where it was a magnet for price, and it did ultimately, you know, give or take, end up holding up price. So I think the 50 weeks really quite important for Bitcoin. It's actually really important for the market as a whole. If you look at the total market cap, it's bouncing off the 50-week moving average. It's also the 1 trillion level, which I don't know if that's relevant for any reason or not, but it is what it is. You know, it is bouncing off there. So Bitcoin's got a bit of a task here, and another thing that we've got on the Decent Trader site is liquidity maps. It's a free chart actually on there. And you can see that there is a hell of a lot of liquidations below here. So this is where you'd expect liquidations to be in the market. And you can see from the long side. So if I go just have the longs 10x longs on. So the way that this tends to work in the past really is that 10x longs, you do get a big, you know, a big move through. A lot of liquidations occur where there are 10x liquidations. 5x, similar sort of story. But when you hit 3x liquidations, that's when, you know, the shit's really hit the fan and like there's a really strong move. At the moment, the 3x liquidations, you know, are below 23,600 roughly. And then the 10x liquidations, if we overlay the 10x's on top, you can see we've basically got this cluster. I think there'll be some 5s in there as well. We've got a 10x and 5x liquidation cluster below where we are, below 25K, basically down to 24. Now I'll show this on the chart over here, a slightly different way. This is the one. So if we come to the 4 hour, here they are. You can see the red liquidations are the 10x's, and the blue is the 3x. So the idea is like 10x, you're kind of taking out of some degen longs. The 3x's, people go in with a bit more, oh, it's fine, the price, it's never going to go 30% or more lower, I'm never going to get liquidated. And then that's when you see a big liquidation event. Where we are currently, like, is there an argument that we could go higher? Well, there's perfect liquidity above the 20-week moving average at the minute for 10x longs, potentially take us up to test the 100-week moving average. So there's definitely some juice in the tank to get us there. But similarly, we are sat on the other side. I mean, just to give you an idea of this playing out, see, we had all of these 10x liquidations building through that consolidation, and they were going to be the obvious target. As price gets towards those below, particularly through a big moving average, you see there, just nuked the 10x liquidations, and then it was done. So the 10x liquidations, I think, are going to be pretty important. Tone, you still there?
Yes. Yeah.
Sorry.
So this is interesting. I was trying to figure out how this chart works, but now that you're showing it in real time, this is so the red line is where it would get crushed.
Yeah, that's where the liquidations happen. So this is basically a price chart version of this stacked.
So the green the green lines is where the shorts would get crushed.
Correct. On a 10x basis, yeah.
Bam. And the other greens are also short 10x, right? They're just high. They just started shorting from a higher level.
Yes. Yeah. Exactly. Yeah. I mean, it's going to take a while to explain. I'll explain it to you in a bit more detail.
No. I understand it. It just but now I get it. Now that you rolled the chart forward, I understand how that chart works. That's super cool.
Yeah. So that's I mean, honestly, if I was going to say that over the years, if you've noticed on Twitter, when I know that the things are really going to get real, I tend to tweet, the picture of the Titanic where they're sort of with the violins and the boat's going down, and it's like, it's been a pleasure, gentlemen, or whatever. And that's the meme, because that's when I'm like, right, we're going through these 3x liquidations. I mean, I can show you perfect examples, if we had time. I think we've been going quite a while, but, you can replay that through this dump over here. And
if we stay on long enough, if we do this long enough, I'm just gonna go right into live coverage of Powell speaking over the Fed call, so it's okay.
Oh, great! Yeah, that is good. Oh, are we getting some movement here? Maybe. So basically, we know there's 10x liquidations on either side of this range that we're on, and like we're gravitating towards those a little bit more to the upside. The big chunk of it, though, the real meat of what we want to see. If you go back that chart where it's like maybe we're going to like blast through that 30k level at some point, and this is what's going to feel that it's this 32k to 36, 35k level. I think that's where we'll blast through that at some point, which is going to be this. Well, it probably won't look quite like that. It'll look more like.
Why are there so many people 10x? How are there this many people that are 10x leverage short right now? I think that's insane.
Oh, because they'll, it's you can sell a good story for being short when you're at the bottom and everyone thinks that you're going to go down. I mean, the sentiment on Twitter when we were down here was basically people were ready to jump. It was some of the worst I've seen. It was a bit of an overreaction, really, because you bounced off.
I was somewhat happy. I mean, like my low was 23.5, and I'm like, okay, it's a 25. I think we're going lower. But I wouldn't bet on it because my bottom is like your return is your risk reward there is like insanely bad.
Yeah, exactly. I mean, look, like as I've said in the past many times, again, like a quote, I don't speak much on Twitter anymore, but one of the things I say is like the worst time, if you're going to sell the 20-week moving average, you don't want to be doing it after it's broken. Like in Bitcoin, that is a terrible time to sell the 20-week moving average. If you can build a case for the 20-week moving average breaking down like I just did there, where I showed the liquidity below it, the price constantly, you know, falling into a range lower and finding resistance in that range, you know, as we've seen, like, you know, that it just looked like the perfect setup for a short, you know, to get out. We had everything there. You know, I use various other algos and stuff, which I won't take you too much through, but they were all effectively telling you to be short, you know. So there was no way. There's a time when you need to have a real honest conversation with yourself if you're long. Like, does it really stack up? But it comes down to time frame preference.
You're using the weekly moving averages on a daily chart. That's why they look like that.
Oh yeah. But that was before you could. I mean, now I think if you just type moving, so you used to have to get someone to calculate and do the maths in the background. But I think now if you just put in moving averages.
I mean, I have my own custom, yeah, but it adjusts.
I can't see.
It's okay.
Anyway, yeah, you can change it anyway from the settings now, just in trading view, any moving average. It's annoying me that I can't see that. MA, was that not printed there? Anyway, you can do it from a normal moving average. You just change it to weekly and then it sticks it on that view. So yeah, it's a question of liquidity. You know, it's all about liquidity for me in this game. You know, market positioning, how a trader's positioned, where's the liquidity? Are we near the liquidity? Are traders, you know, are we seeing open interest going up, right? Open interest means more longs, more shorts. Are we seeing that increasing with price heading towards liquidity? That is just where you get these like catastrophic breakdowns, or melt ups as well. It works the other way around. So that's really what I want to be looking at, you know, is looking at that divergences. And then also you get the advantage of, you know, if you look at long short ratio. So rather than we know that derivatives contracts are 1-on-1. So, you know, there's always as many long contracts as there is short. But what we also know is how many accounts are long versus how many accounts are short. That's a different ratio. The idea being, you know, if there's 3 times as many people long as there is short, then everyone's wrong. And there's probably a much bigger player or just the market makers on the other side of the deal. And so when you see price going down, this ratio going up, so more people going long, so everyone's getting it wrong, open interests piling on, and you know you sat below a big liquidity pool. Like these are the great trades to make, you know. Certainly if you're in a long, you need to be closing it. You can always reopen your position. A lot of people forget that. But anyways, that's sort of preaching a little bit. But so that's what I'm looking at. And looking at this particular chart, you know, I've got these prints for basically support and resistance here. And if I just overlay the liquidity, you can see, so the red liquidity is the 10x, right? That would be a nice takeout. I had thought we might take some of this out, actually, to be honest. We did look a bit like that at one point when this was happening. I didn't actually trade it because I wanted to really buy the 50-week, was more my intention at the time. So, you know,
yeah, me too. That's my $23,500 range right there. It would knock out all of your 10x longs and boom, reverse immediately.
Exactly. But the risk was that if it didn't stop there, you know, you go into, and it's a bit annoying because it's overlaying on top of, I'll take some of this off. It's overlaying on top of support and resistance. But you can see that the liquidity there takes you all the way down to like potentially 19 or 20k. Certainly the first batch would take you down to 21, and then there might be another double dip down to 19 or something, taking out these lows. So I don't think that if that does happen, you know, for whatever reason, I think it's going to be like a wick, and then we'll come back up here and, you know, consolidate and then hopefully move on higher. I don't think I'll spend too much long down there. You know, it'll be a big liquidity event, and they when those bottoms go in, you know, they tend to reverse pretty hard out of there. So if we do get an event like that, that's where I'm expecting it to come down to. You know, there's an obvious pocket of liquidity which you can see, which would get us there, but doesn't mean we'll have to go there. but it is definitely there. You can see it's all this here. So yeah, I mean, downside risk, there is definitely some there. There may be opportunities to get in, but I think, you know, if you go through the whole cyclical stuff, it's kind of like, do you want to have no chips in at this point? Like, you know, like it doesn't feel like that's the right thing either. So I guess that's sort of broadly it for Bitcoin. I mean, as I was saying, I've got an algo, and you know, this algo is very profitable over time, beats HODL, which is the blue line, and it's on the 5 hour, and it's telling me to be long. So that's not me being biased coming
how
up with
often does it
anything.
execute? Like approximately several times a day, or just once
No,
every couple of
so
days?
this strategy is built to, so it looks at the 5 hour, so it's quite complex. Like it's multi time frame based, so it requires higher time frames to be in confluence with lower time frames, and then it'll only enter or exit based on those confluences. So the way that this is set up at the moment, it's done something like 210 trades or something across.
Is it still in test mode, or it actually executes real trades?
At the moment, I am manually executing the trades when I get the alert, but you can, well, I won't actually go into that, but you can set it up to execute. I've been executing it on using 3 commas and other platform. Well, actually, I've only tested it on 3 commas, but it does execute. Yeah.
Okay.
So that tells,
Yeah.
that says be
Well,
long, basically. At the moment, that could change though, right? I mean, that could easily change in the next 5 hours. We'll get a big red candle. I don't know, but you know, at the moment, it's saying looks pretty good. So I have long positions based on that for now, but also obviously I'm long as well with longer view positions. But I also have some funds. I'm nimble enough in this market. If things reverse here and we start heading towards liquidity with those outliers that I've just explained, then you know we can take a view. So that's really sort of it for Bitcoin, really. I mean, you know, as I say, you know, broadly speaking, we've got liquidity overhead. The longer that we spend down here, the more of that's going to build up. The more people are going to get into kid themselves that are going to go lower if we're meant to go higher. Looks like a Wyckoff bottom. It looks like it's a Wyckoff building into another Wyckoff bottom, which will have another big Wyckoff bottom, and it'll just be a series of cup and handles, hopefully. We've got the maths that's kind of done the regression analysis and saying we might end up here. You know, you can have your view, and your view can be fine, your own, but the maths, that's what the math says. Math, if you're American, sorry. And then, yeah, we've got the time-based stuff. And then we have the positioning of the long-term supply, which looks to be behaving exactly as we've seen before and increasing in terms of participants. We've got a bit of a lackluster demand at the moment, which we know that will come. There will be speculation. I have absolutely no doubt about that. Question is, how low do you go in order to get that run up? And I'd say like around here would be really nice, because then we might get that pop up in Q4, hopefully, and take up that sort of 35K liquidity up to there. And then, yeah, like, you know, we'll probably sell off just before the halving. Right. That's what I expect to happen. And then hopefully we'll move on higher. But, you know, we haven't talked too much about global. Obviously, you know, it's the big difference. And I could do a chart on here showing, you know, M2 money supply or the Fed balance sheet. And the Fed balance sheet, you know, in each of the previous cycles has certainly, you know, that being expanded and the money supply getting expanded at the same time has certainly helped the market higher, you know, and helped all markets. But, you know, I don't see there being a world in which we're not going to start doing that again. I think it has to happen ultimately. You know, interest rates can only go so high without severely breaking this system. There isn't enough in the tank, you know, left for your general everyday person to be able to pay their mortgage. You know, they've got nothing left. They can't continue raising rates, I don't think. So I'm relatively positive. I think the overall picture with the ETF and everything looks pretty good. I don't really see there being particularly too much negative downside apart from regulation, but I think that'll probably hit all coins worse than Bitcoin, frankly. And then, yeah, so I'm positive.
All right, sounds good. You want me to go through real quick traditional markets a little bit? Or do you want to go first and then maybe I'll go, or you pull them up and then I'll give you my view on it? Because I have my charts memorized because I do them every freaking day.
Yeah, but well, maybe I might have some bits and pieces on there. Let's have a look. So the dollar. Let's take the liquidations.
Oh, I would love to get your take on the British pound. Man, I've been talking shit about your country over the last week or two, including the whole Brexit debacle. So I'm really curious on your thoughts on the pound's future. I think they're bad, not as bad as the euro's future, but still pretty bad.
Yeah, I mean, without getting into my political stance on Brexit and all that sort of thing, you know, I think there's an economic view, like from an economics point of view, and then there's, you know, political view, which are potentially two different things. The pound sterling, it's obviously falling against the dollar at the minute, and obviously we're looking at the dollar here.
I think that top will not be broken. I
you
had
don't
an
think this top will
MRI.
break?
Yeah, I think it was a monthly MRI for me, and I think that's going to be at the next historic top. We couldn't break the prior top. Well, we sort of broke the prior top, but not the one before that. I was so surprised the pound was able to. Oh, sorry, this isn't the pound chart, just the dollar chart. My bad.
This is just DXY.
Yeah, when you go to the pound chart, I think the pound has turned, and I don't think it's going to break last month's high.
Yeah, well, sterling, I actually had,
Ever.
you know, I was talking about a transaction to do with relative size the other day. And I was basically buying with my sterling the dollars like crazy, you know, in here, because when it was at 1.27, I thought, you know, this is it. You know, I think it's going to dump from here. So fortunately, I managed to save a decent percentage because we've dropped from 1.27 down to 1.23. So that would have cost me quite a lot of money, that. So yeah, I mean, I don't know if this low is going to be broken though. It looks like it might get to.
I think I think all the lows are going to be broken. That's what I'm saying. Like
all of them. You see,
all of them. Yeah, I think yeah, all of them. Yep, and the last one too. I think they're all, but that one might take a few years. But so, I don't think pound will ever see 130 again versus the dollar.
I mean, ultimately, you know, you're talking, there's many different reasons here, but I could see a scenario where inflation keeps going and they just can't put rates up. And I think that would definitely be a catalyst for that. But the British economy is not doing very well. They haven't made the most out of Brexit, I don't think, even though, you know, could you make any better of it? I think they probably could have done, to be honest. So yeah, I mean, I'm not bullish on being British at the moment. It's not a great time, but fortunately we live in this global world now, so it's quite easy to engage with everyone else, and you can get around fairly easy, or you can at the minute anyway. Couldn't in 2020, but you can still get around. So I'm not too depressed on life, but I do look at the UK and I think it's definitely not great Britain anymore, is it? It's a bit of a cesspit, Britain also. But yeah, I mean, I'm looking at the dollar generally, going back to the dollar, because this will make me too depressed. Fortunately, with being in crypto, the good thing is if you want to be in stables, you can quickly get in the dollar. You know, if you want to be, you're very liquid in crypto, which is quite useful. You know, if you're just sort of stuck in your general current account with sort of savings account, and then you need to buy some dollars, it's not something that your everyday person can really do that easily, to be honest. Let's go back to live stream.
FX. Oh, there you are.
FX. Yeah, so yeah, so dollar, I think, you know, getting above the 50. The reason why the dollar, I think, could continue higher is this 50, again, the orange 50-week moving average. When it gets above there, you know, unless it's a bit of a fake out, it's pretty good for like what's going to happen over the course of the general trend. You know, when it breaks it tends to keep going. You know, over here it broke, it was resistance, it broke through, you know, support. So it remains to be seen if this thing just, you know, basically says, okay, we're going to go above here, deviate, and come back into here. From a selfish point of view, and for the benefit of crypto, and also to save the precious pound sterling, I hope that happens, really. But it has broken the 50-week, and that's problematic historically. So it needs to reverse quickly. I don't really have a view on it. I guess everyone's talking about raising rates a bit, you know. So, or at least, sorry, not raising rates. They're talking about pausing, particularly in Europe now. So maybe that gives this the legs to go high. I don't know. I'm not a real expert in that sector. I just think on the dollar specifically, you know, it's ultimately you're looking at like an old fiat currency against another one. So it's two dying. You're comparing like the euro largely against the dollar, both of which are dying. It's just which one's dying the quickest, isn't it? So that's the dollar. I'm a bit concerned about it. I want to see it reverse ultimately. Is the main thing. It needs to get back below that 50-week because it's risky when it's above S&P 500 and NASDAQ pretty much look almost exactly the same in terms of structure. At the highs at the moment, you know, if we come back the weekly, you can see all this resistance built up here. Resistance, support. Lo and behold, it's a point of contention at the moment. I do notice on my algo at the moment that why is it doing that? I'll take that off. It has turned red, which is not ideal. So I mean, this is just a consolidation probably at the moment here. It's just, are we going to break up or down or not? We don't really know as of yet. So it's just at the highs. It's consolidating at the highs. But there is definitely, you know, RSI is rolling over there. We've lost some momentum. So I think there's potentially a tricky period in store for stocks and equities. We need to see that go high. And I think part of it's caused by the, you know, oil prices going up. It's causing a bit of a concern in the market whether or not that is going to impact margins perhaps and how it's going to impact inflation. So that has broken higher as well above the 100-week. I know you look at oil, don't you, quite a bit, strategic oil reserve and that sort of stuff. So you're probably
it's been one of my key metrics, but mostly because I talk shit about politics.
I mean, the worry is that it looks almost exactly the same as this over here, you know. You had these two, the 50 and the 20-week moving average converging and then breaking above the 100, which is kind of what it's doing here. So there's a bit concerning that it's at resistance at the moment, but it is trying to flip it into support. So again, don't really want to see that happening because it's just going to increase the inflation risk and increase the potential to have to increase rates. So I don't get a particularly warm, fuzzy feeling about that at the moment. A bit of a risk, you know, and the outcome might be that we just go sideways. You know, the stocks can't go higher. The dollars kind of continues to increase in value, and as a result, Bitcoin just continues consolidating in here for a bit, which is kind of what I'm saying I expect to happen anyway. I think we're going to struggle to get above that 100-week. I think it's going to be strong resistance at about 29,500. So yeah, I mean, other stuff that I like to look at is coin. I think there's a bit of a leading indicator I find for Bitcoin. I don't know why that is, but it does tend to show bigger, stronger moves quicker than Bitcoin does. And it's a similar sort of Wyckoff accumulation thing going on, you know, depending where you draw your lines. It's a similar sort of thing. But it's back at support here, and it has bounced. I have said, like, you know, I was long on this. I do talk to people at Decent Trader about this sort of stuff, and I was long and I took profits up here. And when we went through this resistance, so because it looked like the perfect inverted head and shoulders here, Wyckoff bottom breakout, but we just extended a bit too much into resistance. Seemed like a good way to come out. I think we're putting in 10% upside in a day. Good time to come out. And then we've come back down, found support for a bit, but rejecting. So I'm very interested on coin if we can break above this $83, $84 level and show some support there. I think it could be a good buy. I hate saying goodbye. It sounds like goodbye and it's going to go all wrong, but it could be a good thing to get into. So that's it really.
Do you want to take a look at Ethereum versus Bitcoin? It just made a new 12-month low.
Yeah,
it's on a weekly scale
at the minute. It is indeed, and you can, oh, there we go. It's actually testing these lows. Now, this is to be expected. and is what generally happens around this time in the cycle. So yeah, I guess the target looking at this would be down here about 0.05339. But I haven't got enough information on the screen now to look into that further. There is going to be liquidations here, potentially, but you'd have to have a look at other things like open interest on ETH BTC to understand it a bit more and how people are positioned. But there is a risk that this could, get into this inefficiency here and fill it in and retest these lows. It does look like that's what it's trying to do. It would not necessarily a great time to short, as I say, because don't have all the information to hand. But it's been in a downtrend for ages. This one, it shouldn't be new news to be sort of wanting to get short at the minute.
Can you pull it up on a monthly chart? I'm wondering what your long-term projections are.
This is probably not the one to look at. Let's look at. Can we do?
Maybe they have an index. I usually go for the index. Do they have a trading?
If you're looking at ETH BTC versus Bitcoin, the chart to use, or a good one to use, is Poloniex. Is it still going? Yeah. So Poloniex's chart basically goes back to 2015.
Right.
So it's not bad. So if you're stepping back at it, there was a big. I believe that we're seeing a big accumulation funnel here going on, but then the kind of breaks came on with that when everything went wrong with 3 Hours Capital. They were really big positioned in Ethereum, and this, obviously the end of the cycle came along, and then we ended up having we got served with the same stuff we get every other time, which is this breakdown in ETH BTC. Now, what we didn't get is a new high in Ethereum versus Bitcoin last cycle, which is
okay. So Phil, so I said this. I was on Into the Cryptoverse, Ben Cohen's channel, who apparently has a lot of shitcoiners watching him, and I said no shitcoin has ever broken the prior cycle stop against Bitcoin. It has never happened. And they all went nuts. I checked as many as I could, and I've only found one exception. Doge.
I've got surely Doge, is it? Yeah.
Right, but that's because of Elon Musk. It wasn't anything to do with Doge.
Yeah, exactly. So there's slightly other reasons, standard, which don't. There must be something else out there somewhere. Surely,
I have not been able to find it.
Did Ada?
Even Cardano. Nope. Came close. Didn't do it.
Fair enough. Yeah, that doesn't look good, does it?
Oh, no, that's a data error. You don't want to use that exchange.
All right. Okay. So yeah, it's tricky to, once you sort of make it, it's tough to push on again.
But that looks like a nasty moving average rollover on a monthly scale. I don't look at Ethereum on a monthly scale, but I'm looking at it on your chart. That's a nasty moving average breakdown.
It is. It definitely doesn't look like it's time to buy. Maybe you'd have to see these lows getting reclaimed really before I would feel comfortable, unless you've got a plan to, be accumulating down at this level. This level probably will turn out to be a good level if it gets there, or maybe even just slightly above there.
I hate double bottoms. If that happens, I'm looking at the 2019 scenario.
Well, yeah, like this, you mean something like that?
No, that next one, 2019. 2019 year, right? So, no, 2019.
Yes.
Yeah, that, right? So that's the double bottom in very early 2019, and then the breakdown in mid 2019. So that's what I would be looking at if Ethereum was to come down to that blue line of yours. So
yeah, so this breakdown largely happened because of the massive increase in the need for Bitcoin as a result of that 1+ token scam. So I think that helped that along the way a bit. But and then eventually it did start to turn. I mean, at this point in the cycle, it does tend to bottom, you know. So if this is where if you remember the charts we've been looking at, we're roughly here in the previous cycle. And it does tend to bottom around here, and then people start accumulating ETH going into the halving. You know, it's kind of done by stealth.
But to me, the current chart looks more like 1 year earlier than that. To me, the current chart looks more like mid-2018. No, earlier than that. It looks
it does look a bit like this. Yeah,
mid-2018, right? So to me, the current chart looks more like mid-2018, so a little to the right. Yeah, that last red, that over there, maybe the candle after that.
Yeah,
but that's what it looks like to me right now. And then the candle after that creates a double bottom, and then we're still not close to the bottom yet. That's kind of how I envision the current chart.
Yeah, I think it's tricky. I mean, it's a slightly different scenario because, like, over here, you know, there's people like, you know, buying the Ethereum, like I was back at $8 or whatever it was, and then selling it at, well, I can't even remember what that was that we got to. So people were very deep in profit, and this kind of rush to the exit there. You know, people who are in ETH now, you know, if you look at ETH, it has corrected. So I don't, people who are a lot further in profit, which I think magnifies the sort of capitulation or the extent to which it happens quickly.
Right. Okay. So my counter argument to that is, right, because if you look at that chart, Ethereum went on a roll against Bitcoin in 2020 and 2021. Like 2020, 2021, Ethereum did great against Bitcoin, and it still is up there. And these people have not panicked. But if the Ethereum versus Bitcoin drops below 0.05, all the people that bought in 2020 and 2021 are going to panic.
If they're, so yes, if they're, you know, if it's crypto to crypto, but if it's dollar to crypto, they're not going to, they've already seen the drawdown. So slightly different scenario. I think that, you know, we're talking about this piece here where in 2018 it did this breakdown in the dollar value, and it lost effectively from $400 all the way down to $89. I don't think this is going to dump down to like $400 or something like that. It just seems like I think the market is going to keep some ETH market share. I just think it's built in now. It's just a question of, is it going to try and put in a new high in the new cycle? And I'd say based on the evidence of what we're looking at, that's going to be tricky. I don't know what the narrative would be for that. I mean, yes, okay, actually it is deflationary now. So, well, allegedly, so it is slightly different setup to Bitcoin. So, you know, to be honest with you, I really don't know. I think that right now going into the halving, you know, I'm a little bit too simple for wanting to go all in on Ethereum or any alts at this point. You know, it's sort of the thing I'll do after the halving, and I'll have a think about it. Then I'll try and work out what the narrative is. But I do know some traders who've been in this game, you know, a lot longer than I have, and they are piling into Ethereum now. They see this as the big opportunity. It's not me, but I do know people who are. So yeah, I think a lot of people are interested in this low. I don't see the real narrative for it to go higher. I could see it just ranging in here forever. You know, I just think that's kind of how I feel. It feels like we've been in there forever. Anyway, it's been over 2 years in this range here. So I don't know. Don't think it's going to change anytime soon. I personally think if we are going to make a low, it'll probably be somewhere, you know, against these lows in here. I don't know. Just a gut feel.
I'm also expecting Litecoin to, you know, fall like 80% versus Bitcoin, like it always does after Litecoin halvings. I don't know if you want to glance at that, or we can move on to maybe your thoughts on gold, and then we can potentially wrap it up.
I did a Litecoin chart, a rare old post on TradingView. That's old school for you. And I said, you know, just this is evidence of halving thinking. Yeah, because the great thing about Litecoin. Tell you what's good about Litecoin. The best thing about Litecoin, it is knowing how the market's going to react before the halving for Bitcoin, because it's the same guys. They're just waiting for the Bitcoin halving. And previously it was the same miners. I don't know if they still mine Litecoin as well on the same gear. But is it still SHA-256? I think Litecoin. I don't know. I presume so. Anyway,
no, Litecoin mines script. It was the same as Ethereum, and a lot of Ethereum miners, when Vitalik decided to go full commie mode and get rid of the capitalism of mining, all those miners switched to Litecoin. It is a different algorithm.
Right. Okay. So, I mean, broadly speaking, you can see what happened in the Litecoin halving. Prior to the halving, what happened was, it would put in a bottom ahead of Bitcoin, and then it would put in a move up towards the previous lows from which it broke down. In each of the previous instances ahead of the halving, and what did it do? It got there just before the halving.
Nice.
So it's doing exactly the same as last time. I know this is a bit like maybe it's too simple for some people. They need a stronger, more complicated story to hang on to. But I just look at what the market's doing, and the market did what it was meant to do. And it did what it did last time. It did what it did before. And the market participants, the miners, and all of the speculators all did what they were meant to do. So the market is behaving beautifully if you know where to look. And what actually happened with Litecoin after that, it actually never got a very marginal dollar appreciation in the previous cycle. It did put in a very slight new high there, but it's now stuck in this eternal range. And obviously that means against Bitcoin, while Bitcoin's been putting in new halvings, it's going to look bad. I haven't looked at the chart, but let's look at it. This is on Binance, so we have a look at Finex will probably do a good job of it. So yeah, it's not a great story, is it? You have to be the best analyst in the world to know which direction it's going. So yeah, I don't know. Litecoin, what's its use case when you've got, I don't really know what its value.
There is
would
no
be,
use case.
really. No,
there is absolutely no use case.
You did used to accept it because you used to, on the basis that it was a test net or something for Bitcoin, didn't you? There was
some people make the argument that it's a test net. Some people make the argument that it's a scaling solution. The scaling solution is now a joke because of Lightning. And while, I can buy the argument that it's a test case, to me, I know a lot of people that invest in Tesla. I don't know a lot of people that invest in crash test dummies that Tesla uses to test their cars. I guess Litecoin is as much of a test net as investing in crash test dummies is versus investing in car companies.
Yeah, I see the analogy. Yeah, so I mean, I don't know. If people are expecting this to put in a new high against Bitcoin ever, I'd bet against it. It's rare that you'll hear me say with such conviction. I really don't see that happening. I was pretty sure in the last bull market it wasn't going to happen. Definitely didn't. Got a nice little run for a bit, I guess. It's tradable. It's tradable if you know where to trade it. Like if you've got a narrative like, okay, they're halving, that might be a good time to get in the Litecoin versus Bitcoin. As soon as you get the pump back up to resistance, those guys are getting out straight away. So, it's got a time and a place, Litecoin, for pushing around when the market's boring, I guess, and the whales want to test what's going to happen around the halving and stuff. So I don't know. I wouldn't be bullish on it versus Bitcoin. Definitely not. Doesn't mean that it can't go up in dollars. So if we do get a bull run, there's nothing to say that it can't get on a bike as well versus the dollar. But why would you do that when you can just do it with Bitcoin or dare I say it, whatever other thing it is that's going to be the flavor of the month. So So yeah, I don't know why I've drawn these charts. I'm just being absent-minded, and these lines that they're not meaningful. But yeah, generally in a downtrend, it's sort of dying versus Bitcoin anyway.
And speaking of economics, like people are confused. Like people are saying, how come BitPay is accepting more Litecoin than Bitcoin? Doesn't that mean that Litecoin is useful? And absolutely not. There's two reasons. One, real Bitcoiners don't use BitPay. We actually hate BitPay. We refuse to use it out of principle. And any real Bitcoiner that accepts crypto payments, Bitcoin payments, they'll set up a BTC Pay server, which is a free open source competitor to BitPay. And it was literally created to be that because Nicholas Dorier got pissed off by BitPay and went ahead and built it. That's one reason. The other reason is an intermediate company who instantly sells the crypto to hand the receiver cash. You don't want them using your token. When people use Bitcoin through BitPay, that Bitcoin gets sold in the open market, lowering the price of Bitcoin as the merchant receives fiat. So it's great that BitPay is mostly is like all the volume on BitPay is Litecoin, because that means that people are using Litecoin. BitPay sells it on the open market. That lowers the price of Litecoin, and the merchant gets their dollars. All of these people using Litecoin are then not going back to exchanges to replenish their Litecoin just to use it again. This was the failed Roger Ver model and why Bcash failed.
Yeah, I mean, I think some people make the argument that it's useful when other transaction fees are high, and I do think that is relatively reasonable. You know, it does have a use case, I think, when the network gets really congested, in my opinion. I can remember a couple of instances.
It used to in 2017, but not today.
No.
Today, every time the network got congested, the amount of usage of SegWit went up. The first time it went from 20% to 50, then it went from 50% to 80. Recently, it's gone from 80% to 90%, thanks to ordinals. And Lightning use is higher. So today, if the fees go higher, Bitcoiners are not going to use Litecoin. They're just going to start using Liquid. And if they haven't yet switched to native SegWit, BC1 addresses, they'll do that first.
Yeah. I'm just going to say, yeah, honestly, Turn, I've passed on from a little bit of the technicals behind the stuff in the scenes with what's going on. I just send the Bitcoin transaction. If it's cheap, then that's good. That's the way it works for me in my head now. So, and I know the ordinals as well is effectively NFTs, wasn't it, on Bitcoin, which is causing a bit of congestion. But I don't know. I can see certain scenarios where if you really need to get yourself out of jail, you might be able to use Litecoin. Like if an exchange, I don't know, if you had Ethereum or something and you needed to get it out of the exchange and they stopped Ethereum
I've actually never held Ethereum, like ever. So when people are like, Tone, I want to send you some shitcoin, and I'm like, well, that's great. What do I do with it? I've never held Ethereum. I've never used MetaMask. Like, I wouldn't know what to do with your shitcoin that is on top of Ethereum or your NFT or your whatever, because I don't have any gas to then move it anywhere else. It's just like a waste of time when people try to convince me.
Why don't you just take the plunge, just buy the top 10 cryptos, throw in like a small amount, $1,000, see how you do over the cycle. It'll just be funny. Then you can say you've held these coins. I don't know. I'm probably being blasphemous. But yeah. Okay. So anyways, Tone, I'm going to actually have to get off because I need to go and put the kids to bed and stuff. So it's been been
perfect.
Really good.
No, thanks for I'll turn my camera back on here. No, thanks for hanging out for sure. Let me jump back on screen share real quick. And we're going to close this out. Thanks for giving us all that time. And let me go back to your, wait, I'm in the wrong place. Here we go. Oh, this is the chart I was going to show you. So that's the same chart that you had, but I also have the very first cycle, but I started it later because that's when the first price of Bitcoin showed up. Are you with me, Phil?
Yeah.
Okay.
Yeah, makes sense.
So even the first cycle still matched.
Does it kick off again? So where's the sorry, hang on a minute. I'm a bit tired here. Is the red one the of course the best one? Yeah.
Right. The red one was the original. That was the pre-halving, the original pre-halving.
So I'm just seeing, where are we now then? So we're sort of
We're
like
right here. We're about to go right into that $13 pump.
Yes. Yeah. And we did get that. We did get a pump. Yeah, I don't know. The thing is, the original cycle was just so like illiquid. It's just like it was a different beast, altogether. I mean, $13.
It is, but it's still pretty. It's still pretty interesting.
It is interesting. I mean, you got the pump around the same sort of time, so there was an additional pump, yeah, at that point in time. It just makes me feel ill looking at that chart. $2 bottoms. Oh man.
All right, guys. So real quick before Phil says goodbye, the financial summit is coming to the UAE on November 5 to 10. I'm going to continue to harass him in order to join us out there. It will be amazing if he does. Unconfiscatable coming to Las Vegas in December. And go ahead and close us out. Any final thoughts, Phil?
Well, firstly, I'll just say if you actually have managed to sit through all of me talking there, then well done, because I must have been boring some people, but hopefully you found it of some interest. Yeah, if you want to come and have a good time, you can come and follow me on Twitter and join us for the next cycle. And then obviously, I've been through some of our tools and stuff at Decent Trader, but there's a whole lot more. A lot of it's free on there. So if you'd like to join, sign up to that, have a look at the website, join the mailing list, whatever. That'd be cool. But if not, yeah, thanks for listening, and hopefully speak to you again with Tone at some point in the future. Yep.
Oh, I think the Federal Reserve has just announced the rate. It's 2 o'clock. I think it was at 2 o'clock. Someone confirm on a live chat what they say. The live chat is always like 30 seconds behind. No, Phil, thanks for joining. I'll let you go. And I may stay on a few more minutes because of the Fed thing.
Sure, yeah. I mean, if you want to have a chat about a few things another time soon that we've talked about, then let me know. But good. All right. I shall drop out and ciao for now.
Awesome. Thank you. All right. Hey, guys. So what the Fed say? FOMC. Rate unchanged. Conference is coming up in 30 minutes. I don't know if I'm going to keep the stream going or not. So they didn't raise, right? Otherwise, we would have seen a huge market move. I don't see anything in the market. Yeah, it's going to be a non-event today. Oh, take that back. No, it's probably still a non-event. We dropped, so they definitely didn't lower rates. So either left them unchanged or they raised them. I'm assuming they left them unchanged. Keep it going. People are asking me to keep the stream going. It's not affecting Bitcoin, I don't think. Bitcoin's been unaffected. Well, sort of. What they say 19 hours ago. No, I want like now, real time. Let's go to the Fed website. Is this the new one? What's the date on this? I want the latest announcement. I wasn't really ready. I didn't think we were gonna. Yep, right here, press release. All right, release. Let's read it.
Board of Governors of the Federal Reserve System. Recent indicators suggest that economic activity has been expanding at a solid pace. Job gains have slowed in recent months but remain strong, and the unemployment rate has remained low. Inflation remains elevated. The U.S. banking system is sound and resilient. Tighter credit conditions for households and businesses are likely to weigh on economic activity, hiring, and inflation. The extent of these effects remains uncertain. The committee remains highly attentive to inflation risks. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. In support of these goals, the committee decided to maintain the target range for the federal funds rate at 5.25 to 5.5%. The committee will continue to assess additional information and its implications for monetary policy. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities, as described in its previously announced plans. The committee is strongly committed to returning inflation to its 2% objective. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessments will take into account a wide range of information, including readings on labor market conditions, inflation pressures and inflation expectations, and financial and international developments. Voting for the monetary policy action were Jerome H. Powell, Chair.
All right, they left it unchanged. The market should be fine. We have an MRI. Oh, that's on Binance. Oh, Jesus. I think this will likely, well, I was looking for a bit of a low in the S&P. I think we're going to reverse. Today should mark the low in the S&P. It's actually not that bad. It's actually not that bad. Let me go to the daily look here. Yeah, we were lower yesterday and we rallied yesterday. Yeah, this is nothing. This is no big deal. Gold dropped. Let's see. Doesn't look like it. Looks like gold's up. Yeah, not sure why people think gold dropped. Gold's doing well. Gold's breaking a moving average. It's on a green star. Gold did not drop at all. Unless this data is delayed. This data is delayed. 10 minutes. So I don't know what happened to gold. I need 3 more minutes. All right, guys, I'm actually kind of tired. I don't think I'm going to stick around for Powell's speech. All right, guys, I think I'm going to get going. I mean, I can stick around 2 more minutes and see what happened to gold. And otherwise, thank you for watching. It was great having Phil here. I think the Financial Summit handle tweeted stuff out about the Fed. Let's see. Boom, here we go. Fed dot plot suggests a potential 25 to 50 basis point rate increase later this year. Wow. Wow, 50? No wonder the market dropped. However, Fed futures currently indicate no rate hike in the near future. Okay, let's see. I don't know how quickly these update. I think tomorrow there's going to be a very different picture. Yeah, let's see what it looks like tomorrow. All right, check out the thread, guys. Also posted the news today, but I haven't talked about it. And tomorrow, on tomorrow's stream, we're going to talk about the Strategic Petroleum Reserve. All right, I peek at gold, and then I'm going to get going. Where's gold? Maybe another minute. Oh, gold dropped. I'm not going to say it dropped hard, but dropped from the top. All right, guys. Thank you all for watching, and I will see you all on the next one. Bye, guys.